This is why I say this could change your trading, because if you're paying attention to this, if you're paying attention to these numbers here, something like gold, you might be able to. Today, we're going to be talking about something that could absolutely change the way you trade. And I'm being serious about that. I want you to stick around and hear what I have to say, because this is something that is really, really important and really, really interesting that you can do yourself that could potentially change the way that you trade. Now, we're going to be talking about COT data, and a lot of you are probably familiar with COT data. And if you are, good, because COT data is a great thing. But if you're not using it in this way, again, pay attention to what I'm going to say here, because this is really important. If you're not familiar with COT data, basically COT data, COT stands for the commitment of traders data. And you can kind of classify traders into two different categories if we're, being really simple with it. You've got retail traders, which are people like you and me, who nobody's paying attention to what you're trading. Nobody's paying you to trade. Maybe you do it full time, maybe you do it as a hobby, but it's you and your computer, and you're trading yourself, and that's your thing. That's the vast majority of traders, day traders. But then you have smart money traders, sometimes people refer to them. And these people are getting paid lots of money to trade, because they've proven that they can do it consistently, and they have access to what seems like tons of resources, and they have to report what they are trading. People can actually track that, and it comes out in the COT report. And if you've never seen the COT report, this is what it looks like, and it is kind of awful to go through. There is a lot of confusing stuff in here. It is very spread out, but luckily what the Edge Finder actually does is it takes the most useful information out of that COT report and displays it in a super useful and easy to read way. And I'm going to explain exactly how to read this and how you and what to look out for here that could change your trading. Now, again, a lot of you are probably familiar with COT data in the Smart Money Tracker here in the Edge Finder, and if you are, good, because when we talk to people about the Edge Finder, more often than not, a lot of times people say that this is their favorite feature, this is the most useful feature, and the Edge Finder is absolutely full of interesting, useful, just all kinds of really in-depth details and data and numbers. But people love coming back to the COT data, and I think if you watch to the end of this video, you're definitely going to see why. So again, I'm going to show you something that you may or may not have seen before that could absolutely change your trading. So let's go ahead and jump right in to exactly what I'm talking about here. And to do so, I'm going to start off by simply just explaining what we're looking at. So again, this is our COT data Smart Money Tracker here in the Edge Finder. And what we're looking up right up top, very simply, is just a bar chart that lists the most heavily shorted asset all the way to the most heavily long asset from smart money traders. So we can see that the 10-year US yield bonds right here, this is our most shorted asset at the moment from smart money traders. Nearly 73% of all smart money traders are short on the US 10Y, whereas ZAR, the South African Rand, just happens to be the most long asset right now from smart money traders. Nearly, about 82% of all smart money traders are long on the ZAR, and you can see that it just kind of goes incrementally. Most short, most long here. You can see we have Swiss franc, Bitcoin, the dollar, pretty much 50-50, a little bit favored on the long side. Oil, the euro, and gold here. Gold is number 2. Almost 77% of all traders, smart money traders right now, are long on gold. And I'm glad that gold is number 2 right now, because gold, I think, is the perfect example that I want to give you to show you how this could change your trading. Because if we move on to this chart, it's a little bit more intimidating, but this is really what you want to be paying attention to. So you'll notice up top here, latest COT filing. This chart compares the last COT data report to the most recent COT data report, and it's looking for changes. It's looking for those changes because that could actually show you if the smart money traders or bias towards a certain asset is beginning to shift a little bit by that. And I'll show you exactly what I mean by that. But first, let me show you what you're looking at, because again, I know all these numbers can be a little bit intimidating at first, but really it's pretty simple to read. So right here we have long contracts and short contracts. This is just the total number of open, long, or short contracts on any given asset. So if we were going to use gold for an example, we can see that there are currently 271,665 open long contracts on gold, compared to just 83,051 short contracts on gold. Again, and this is all coming from the latest COT report. So pretty clear to see why, the gold was so heavily favored long. We've got well over 200,000 open long contracts here, just 83 open short contracts, clearly more long than there are short. So short, everything makes sense, checks out. But this is when things start to get interesting. We have these two columns here, and you can see this says latest filing change in long/short contracts. What that means is this is looking at the difference between the last report and the most recent report. And in that, we saw that 19,041 long contracts were closed on gold, compared to just 6 short contracts being closed on gold. Now you might be wondering, so what? Nobody opened any short contracts and nobody opened any long contracts either. Just 19,000 people closed. No, so it's the overall number. Let's just say hypothetically that 100 people had opened long contracts, right? And 19,141 people had closed their long contracts. Well, you had 100 people open, you had over 19,000 people close. You take the difference between those two numbers, and it comes out to 19,041 people. That's how we're getting that number. So over 19,000 people closed their long contracts, and then on the short side, we just had 6 people close their short contracts. And then we get to this number here, our net change percentage, because this long and short is just the overall. This is exactly what we saw up here. We have 76% long and 23% short, and we'll see that right here, 76 and 23. That's just going off those numbers right there. The change here, though, is right here. Net change percentage. We're seeing an overall net change percentage of negative 1.19%. That means that the tide is changing. It's shifting in smart money's mind. We're beginning to see that now. They're closing all these long contracts, and it's really heavily favored long, but why are they closing so many long contracts? Why is this showing up in the red? Our net percent change is in the negatives here, whereas something like the ZAR, where you can see they opened 1,000 long contracts, they closed nearly 400 short contracts. Clearly, the opinion on the ZAR right now from smart money traders is that they are long on it. Gold is a little bit different, though. We're seeing that negative number here. We're seeing the net change percentage come in negative, even though they're still favored on the long side, because again, it's shifting in their minds. We're seeing them close their long contracts. And this number, because it's negative, because it's in the red, if you were to go look at the chart and see, well, what's happening to the actual gold chart? Is that true? Is it not as bullish as we thought? Let's just take a look. So here's the gold chart. Gold, 4-hour chart, and what do you see recently? Well, most recently, it's been in a downtrend. In fact, it started its downtrend before the beginning of the new year. We see this little high right here, this little peak, Wednesday, December 27th. Ever since then, it's just been in a pretty solid downtrend. And now, charts can range, they can go up and down and whatnot. But why is COT changing their opinion on gold? They were so heavily bullish gold. And now that's starting to, take away some of that bullish momentum. And the chart is doing the same thing. This is why I say this could change your trading, because if you're paying attention to this, if you're paying attention to these numbers here, something like gold, you might be able to catch that move at the same time that these COT traders are catching it. If you're paying attention to this stuff close enough and you do your proper research, you apply your strategy, you think it through, and you find a good entry, you might be able to catch this reversal on the short side. If we're just using gold as an example, COT's opinion, is it shifting? The chart is certainly in a downtrend. They were heavily bullish, but who knows? It looks like the tide is shifting. So that's why I say that COT data is so important, especially when you compare the difference between the last report and this report to see how the smart money traders' biases are shifting along with the markets. I think that's a really important thing to pay attention to. And also, I just mentioned, because I have this up, if you like these indicators that I have on my trading view right here, we have this one right here that shows you kind of like these extension zones, as well as this one that just simply is giving you these buy and sell kind of indicators. These are available on our website if you are interested in them. You can also find them in the description down below. I'll explain really quickly what these are, because I think they are very cool, and I've got them up right now. Basically, this one, you can see that there are red and green zones. This is basically what we consider to be the we have an algorithm that automatically determines if price has got overbought or oversold. So this red up here means overbought. If price closes within this range right here, then you know that price is in a extreme area where it may be being overbought and it's just due for a reversal. And you can see that happen exactly right here. It just got super clustered up here. It absolutely spiked, and the market was just like, this is too high. It simply has to come down back to a normal level. What did it do? It immediately just came back down. Same thing right here. It got too high again. And it flagged it. It said this price is too high. It's due for a reversal. And that's exactly what happened. We also have, these little indicators right here that these, again, and this is not showing up after the fact. This is showing up after these candles close. Once the algorithm notices a shift in momentum, it'll just give you this buy or sell bias. And it's pretty cool to see it, in action. Look, here's a good example of price got into an extreme overly sold range. And then what did it do right after this? It did that. And again, these buy and sell things aren't showing up after the fact. This is like after the candle closes. So it said sell here, and then it did that. It said buy. It really is very cool to see. All this stuff that I know the rest of the team has been working so hard on kind of come to fruition, and now these are available to you guys if you want them to. Again, down in the link in the description below, you can chat to one of our team members. You can find them on the website. But yeah, I just thought I'd throw that in there because these are really cool. But yeah, I hope you guys enjoyed taking a look at the COT data and me kind of explaining why I think it's so important to pay attention to how smart money traders' biases towards certain assets can shift along with the markets, and you can kind of catch that move at the same time they do. But again, make sure that you're applying it to your strategy. Make sure that you're looking for good entries and exits and all that other stuff, because it's not as simple as just seeing a red number here and then going and selling the market. Obviously trading is not that simple, but if you are taking the time and doing the research and have the proper tools, then it can certainly make a difference for you to find better trade setups for yourself. So again, hope you guys enjoyed the video, and if you want the Edge Finder for yourself, if you made it all the way to the end of the video because you thought this stuff was interesting and useful, and you want the Edge Finder for yourself for a discounted price, you can use promo code A1YT at checkout for a discount on the software. Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.